Starbucks has to pay out $2.8 billion, or about 602 million gingerbread lattes. Yum. Investor Beat starts now. Thanks for watching. I'm Alison Southwick. Not much doing with the Dow today. It's down only slightly with little in the way of economic indicators or companies making moves. On the horizon, Dow component Cisco will announce earnings after market close today. Joining me now in studio is David Meier and Matt Koppenheffer. Our top story, Starbucks will be forking over $2.8 billion to Kraft Foods after a long battle over a partnership gone bad. It was over stocking Starbucks coffee on grocery store shelves. So, Matt, when it comes to this hit financially to Starbucks, the stock really didn't go anywhere. The market just kind of shrugged. Was that the right response?
Well, $2.8 billion is kind of a lot of money, even for Starbucks. But on the one hand, investors were expecting that it was going to be some kind of, there's going to be some sort of payout related to this. And on the other hand, investors in Starbucks are less concerned with something like this and more concerned with the big picture and Starbucks growth over the long term.
Now, David, I like how the PR person for Starbucks spin this. They basically said, we disagree with the arbiter's decision, but look at how much value there is to at-home coffee sales. So what did you think about that?
I too thought it was brilliant. And if you think about the numbers, so they tried to get out of the deal for $750 million to begin with. And the reason they wanted to get out of the deal was because I think Starbucks realized, hey, we're better at this than we think, and this could be a lot bigger. Today, that segment generates about $1.5 billion in revenue, and all of that is now going to Starbucks. They don't have to divide it up. So it is spin, but I think it's in the right direction.
And bottom line, what do you think of Starbucks?
I really like everything that this company is doing right now, from their products to their social, how they're using social media to market themselves, to connect with customers. I really like what Howard Schultz is doing with the franchise.
Matt, how about you? What do you think about Starbucks? And you have to ignore the fact there are probably like 20 Starbucks cups behind us right now.
Look, I love Starbucks. I'm a huge fan of the pumpkin spice latte. You mentioned the gingerbread latte before. Pumpkin spice latte, delicious. But it's $6 when I go in there. The value investor in me cannot get down with that. I should get at least 3 coffees for $6, at least.
Right. All right, now it's time to look at some of the day's movers and shakers. Apple announced today that they are investing $10.5 billion, that's with a B, into new manufacturing technology such as assembly robots. So, David, this $2 billion investment is actually more than the market value of 3D printer company 3D Systems. So, as a former CEO or COO, this kind of sounds like an order from Tim Cook here.
Oh, it definitely does. This is a huge investment, but it's an investment. Here's the reason why I think it's important. If we look at what they've done recently, they've updated the operating systems, new iPhones, new iPads. This is the last piece of the puzzle. This is the manufacturing technologies that are going to make all of those devices for the next 5 years. Again, you're right, it's all Tim Cook, but it's all for the future growth.
Hotel chain Extended Stay America is up today for their first day of trading. The company went public today a mere 3 years after leaving bankruptcy protection. Matt, how did we go from bankruptcy to IPO in such a short amount of time?
Well, nice cash flow. It's a hotel chain, and it's one that a lot of people use, so there's good cash flow at the company, and also a healthy dose of private equity. So this is a private equity group that's bringing it public. And I think one of the things that we need to highlight here is just how great the IPO market continues to be. And this is yet another IPO that's up double digits or more during its first day of trading.
Right, so we're going to stay on that topic of IPOs because Potbelly is up big after showing a strong revenue growth in their first earnings report as a publicly traded company. I think they went public in early October.
Yep.
So the stock has doubled out of the gate when it IPO'd, but since then it's kind of just hung out at $30.
Not today.
Not today, though. It's up. Today it's up. So where do you see Potbelly going from here?
Well, that's a very good question. I think before we can answer that, we got to look and see where it is. And right now, in comparison to some potential peers that it's aspiring to, Chipotle, Panera, its margins are way behind those companies. So I think in order for the stock to keep going, we got to keep seeing that margin expansion. I really like how the restaurants are operated, but we got to see the productivity flow through the margins.
Colorful clog maker Crocs, I got that out, is rumored to be exploring options for going private. The company has had a rough go lately as it tries to keep up with fashion, as if Crocs were ever really that fashionable. So, Matt, obviously...
Don't tell that to Mario Batali.
Well, no, I'm not going to tell anything to Mario Batali. Investing in fashion is tough, right? And so I guess the question is, we all have to wear clothes. So which companies, can someone invest in? Which companies have done well in this space? That's
a good point. So some fashion-forward companies have done quite well. Decker's Outdoor is a good example of a company. They own the Uggs brand, and that Uggs trend has just gone so much further than I ever thought was possible. But for me, I am not really good at predicting what the next fashion trend is going to be, so I like companies better like VF Corp, which owns a whole bunch of different brands, and brands that aren't necessarily in fashion, they're just staples. Columbia, Lee Jeans, Wrangler, Timberland, just a good stable group of clothing brands.
All right, well, that's going to do it for today. Let's look ahead. I want to hear about one stock on your radar.
Right now, the stock on my radar is Tesla. And it's not because of the fires, and it's not because Elon Musk was speaking at an investor conference. It's because I really like what this company is doing. Elon Musk has set a vision for, I'm going to make an electric car. I'm going to try to help the world get off of fossil fuels. And he's done a phenomenal job of getting the product out, getting an infrastructure around the product, getting people excited about the product such that when they stop building the high-end cars and go down to the mass market, people will be ready. I really like what they're doing.
Innovating at the top.
Innovating from the top.
That's a big mantra. All right, how about you, Matt?
I'm looking at Walmart, and Walmart's reporting earnings tomorrow. I'm a Walmart shareholder, and going from Tesla to Walmart, it's kind of like you think, well, this is a Soviet-era company. This is so out of touch. But what I like is Walmart's vision of being able to serve customers across different formats, whether it be the big supercenters, the smaller format stores that they're now creating, or online, and having that all cooperate. So I'm going to be listening to the call tomorrow, looking for updates on how that vision is unfolding.
All right. Well, for David Meier and Matt Koppenheffer, I'm Alison Southwick. Thanks for watching.